And more on the economic front now with Simon Mariner standing by at St George. Simon, always good to have you with us. RBA again at the podium today. On rates, what are you reading?
Yes, hello again. We did have EB on the podium today, certainly the Assistant Governor. Not a lot of clues really, nothing really new I suppose on the cash rate outlook or the outlook for monetary policy. Remember, we did hear from Governor Stevens just last Friday in his semi-annual testimony to Parliament, and just the week prior we had the quarterly statement on monetary policy from the Reserve Bank. Financial markets, investors still betting on the fact that we're going to see a cash rate hike by the RBA before the end of the year, November in fact. So there's not too many new clues from EB. He did comment on some financial systems development, both here and abroad. He did comment on the resilience of the Australian banking sector, its ability to power through this slump, although perhaps too early to say that we're through the worst of it. He did mention that there is a little bit of strengthening in confidence. So overall, pretty upbeat and optimistic.
Enough to move markets?
Not really. The markets didn't really move too much today. In terms of economic data, we only had the leading index for June today again, which is not a big market mover. The leading index tries to predict or forecast the growth in an economy. It was rather modest improvement of 0.7% today, but it does, I suppose, point to a steady improvement for the domestic economy here today. As I understand it, the ASX ending pretty flat today. Not much market movement as you've seen today from that speech either.
Dr. Edie talking about the impairment rates for banks, comparatively speaking, remaining very low. Of course, they have been provisioning for higher impairment charges. How do you read those two almost sort of disparate positions?
Well, I suppose, again, hedging his bets a little bit. There wasn't too many new sort of statements in there that really stood out for me. No additional clues. We did mention the bank guarantees, of course, and certainly how that might affect the markets. There was one thing that sort of stood out a little bit, perhaps on the cash rate outlook. I'll just read a quote that I did pick up from him today. There was a risk of an early tightening choking off confidence and demand prematurely. So perhaps, a bit of an indication that they are cognizant of the fact that they do need to perhaps leave those rates a little bit lower, a little bit longer, to perhaps not choke that confidence prematurely. But again, at the same time, aware that they've got to move back to that neutral cash rate as soon as they can. As I said, investors, financial markets pricing in a rate hike from the RBA before the end of the year, November. It's this House's view, it's St George Bank's view, that that's perhaps a little bit too bullish, that we perhaps won't see one until perhaps early next year.
So really, look at retail sales, look at consumer confidence, and don't jump too soon.
Certainly, and again, it's all down to, at the moment, that flow of economic data that we're seeing coming through.
Well, we got some more data today. Business investment, how much of a leading indicator is that?
Well, as I mentioned, not much of a shake the market mover. It really is a really minor indicator. Again, we saw some jitters coming out of China today, so their share market's coming off. It was just mentioned just a little bit earlier there. So I think those sorts of factors probably factoring into what's been going on in the market movements today, rather than sort of relatively minor economic data.
Is that size of the Shanghai Composite gain something that you're daily mindful of as almost a barometer on the way we move?
Well, I think we've really got to look at it rather closely. The Aussie dollar, again, slightly higher, although in the last hour it's moved slightly lower. The ExxonMobil deal, obviously, we're all reading about in the news today with PetroChina to supply liquefied natural gas. Certainly that's going to weigh heavily on the Aussie dollar here and on our markets. A big tie there, I think, from memory, Rudd pointing out that the deal is going to contribute something towards about 5% of this economy's GDP. So a big deal there in many senses and many interpretations of the word there, and certainly more synchronisation perhaps of our economy with that of China also.
Yeah, not one mention there of the United States, but I mean, we always look stateside when we look at the oil price. They got a bit of a boost for the commodity as some more companies delivered good results. But should we be more looking at Brent as a guide, do you think?
Well, yeah, oil strengthening for a couple of days straight, although again just slightly off, up over $70 a barrel there. Predominantly that comes from inventories. There was a report out in the US that inventories have dropped, so that perhaps factoring more into the price, the oil price per barrel there.
Is it so relevant relevant to be focusing on US supplies, though? It might be the world's largest consumer, but I mean, in terms of exports, China still has to be front and centre, doesn't it?
It certainly does. Look, you know, where big gas deals are concerned, it's certainly an alternative source of energy. Oil's important. Manufacturing, obviously huge and uses a lot of oil. It's one of the largest inputs there. You know, if we're going to see the reverting back to the old system of China selling manufactured goods to the voracious US consumer, and if that US economy does continue, I suppose, to grow and consume more, then oil's going to still be a serious factor going forward.
Q2 national accounts out early next month. Interesting numbers for you to be digesting moving forward. For now, Simon, appreciate it.
Thank you very much.
Simon Mariner there from St George.